Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in plain sight within company filings. Today we are diving into Inhibikase Therapeutics, Inc., and let me tell you, this report is about turning that research into actual cash, and they are not shy about it. So, what happened? Inhibikase Therapeutics, or IKT as they are known on the Nasdaq, has just announced a significant public offering of their stock and warrants. Think of it as selling pieces of the company to raise a big chunk of money for their future plans. This report is dated the 20th of November 2025, and it tells us about a big event that happened that very day. This filing is all about keeping the United States Securities and Exchange Commission, or SEC, updated on important company happenings. The company we are looking at is Inhibikase Therapeutics, Incorporated. They are based in Delaware and have been around for a little while, with their stock trading under the ticker symbol IKT on the Nasdaq stock market, LLC. They are issuing shares of their common stock. Now this means they are selling ownership slices of the company. Interestingly, they are still considered an emerging growth company. This means they have some flexibility with reporting rules, but they are working towards growing and establishing themselves. The main event here is the company entering into an underwriting agreement. Basically, they hired underwriters, which are financial firms like Jefferies LLC of a Securities Incorporated and Cantor Fitzgerald and Company to help them sell a lot of their stock to the public. They are offering over 46 million shares of their common stock. That is a lot of ownership pieces to go around. On top of that, they are also offering what are called pre-funded warrants. Now these are a little different. Instead of buying a whole share up front, investors can buy these warrants which let them buy shares later at a fixed price. It's a way to get people to invest now with the intention of owning stock later. They are offering enough warrants that could eventually lead to another almost 23 million shares being issued. And here is something extra for the underwriters. They have a 30-day option to buy even more shares if they think the offering is going really well. This is sort of like a bonus buy option for them. Each of these common shares is being sold for $1.45, and the pre-funded warrants are being sold for just a hair less, $1.449, which makes sense because when you exercise a warrant, you usually have to pay a small fee, in this case 1/1000th of a cent. Now let's talk money. The company expects to bring in around $93.6 million after all the fees and costs associated with this offering. If those underwriters decide to buy all those extra shares, then the company could end up with a massive $107.7 million. That is a huge influx of cash for a company like this. This whole deal is expected to wrap up by the 24th of November, 2025, assuming everything goes smoothly with the usual closing conditions. This offering is being made using a shelf registration statement. Think of it as having a pre-approved plan to sell stock over time. They filed this particular plan back in June, and it became effective in late June of 2025. The underwriting agreement itself is a pretty standard contract. It lays out what the company promises, what the underwriters promise, and how they will protect each other, especially regarding the laws about selling securities. Moving on to another important piece of news. Effective the 20th of November, 2025, the company and the holders of their Series A-1 and Series B-1 warrants have amended the terms of those warrants. This amendment is to bring the warrants in line with the company's exciting plan to push their drug candidate, called EKT-001, into a major global phase 3 clinical trial for pulmonary arterial hypertension. Or par, this means they are moving closer to potentially getting their drug to market, and they are making sure their investors with these warrants are on board and aware of this progress. Now before we wrap up, it is important to mention this cautionary statement. This section basically tells investors that many of the statements made in this report are forward-looking. This means they are based on expectations and beliefs about the future, and actual results could turn out to be very different. Things like clinical trial results, future plans, and even the timing of the stock offering could change. They are warning us not to bet the farm solely on these predictions. So, what is my take on all of this? Inhibikase Therapeutics raising nearly $94 million, potentially over $107 million. Through this offering is a huge vote of confidence, or at least a necessary step for their ambitious plans. The sheer number of shares being offered indicates they are serious about scaling up operations and funding their advancement of IKT-001 into phase 3 trials. This capital injection is critical for a biotechnology company that relies heavily on research and development to bring new treatments to patients. However, we also see they are still an emerging growth company. This suggests they are still in the earlier stages of their growth journey, where significant investment is needed and profitability might still be a ways off. The amended warrants tied to the phase 3 trial for pulmonary arterial hypertension show a clear strategic direction. If this drug candidate proves successful, The value of these warrants and the company's stock could skyrocket. The risks mentioned, particularly those related to clinical trial outcomes, are substantial. Biotech is a field where promising candidates can hit unforeseen roadblocks, leading to significant setbacks. Investors need to understand that while the potential upside is considerable, so is the inherent risk. Overall, Inhibikase Therapeutics is making a bold move to fund its future. The success of this offering and, more importantly, the progress of their drug candidate will be key indicators of the company's direction and financial health in the coming years. It's a high-stakes game, and this funding is their ticket to play another round. Alright? That is our breakdown of Inhibikase Therapeutics' latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.